5 money concepts you must understand before you turn 30. Part 1. Taxes, banks, interest, inflation, and currency. Imagine this. Tomorrow morning, you wake up and check your bank account. The balance says $1 million. Just like that. Sounds like your life is finally perfect, right? But here's the twist. If you don't understand just 5 basic money concepts, that $1 million could disappear much faster than you think. In fact, most people don't lose money because they're lazy. They lose money because nobody ever taught them how money actually works. Today, I'm going to explain the 5 financial concepts that quietly control almost every dollar you earn, spend, save, and invest. And the last one might completely change the way you think about money. So, let's get started. Taxes. The money you never really get. Imagine your boss tells you, "Congratulations, your salary is $5,000 this month." You're excited. You start thinking about everything you're going to buy. Then, payday arrives. Instead of receiving $5,000, you receive less. So what happened to the rest? Taxes. Think of taxes like a membership fee for living in a country. Governments collect part of your income to help pay for roads, schools, hospitals, emergency services, and many other public programs. Whether you like paying taxes or not, they'll affect almost every paycheck you receive throughout your life. That's why financially smart people don't just ask, "How much do I earn?" They ask, "How much do I actually keep?" And that difference matters more than most people realize. Banks. What really happens to your money? Here's a question. When you deposit $1,000 into a bank, do you think your money simply sits inside a giant vault? Not exactly. Banks don't just store money. They put it to work. When thousands of people deposit money, banks use part of those deposits to lend money to other people. Someone uses a loan to buy a house. Someone else starts a business. Another person buys a car. The bank earns money from those loans, then pays a small amount back to people who keep money in savings accounts. That's why banks are much more than giant piggy banks. They're one of the engines that keeps money moving throughout the economy. Interest, the most powerful force in money. Now, imagine you borrow $100 from a friend. 1 year later, he asks you to pay back $105. That extra $5 is called interest. It's simply the cost of borrowing money. But here's the exciting part. Interest can work against you, or it can work for you. If you borrow money, you usually pay interest. If you save or invest wisely, you can earn interest instead. Same rule, completely different outcome. The people who build wealth aren't always the ones with the highest salaries. They're often the people whose money starts earning money for them. And that's the moment everything begins to change. Inflation. Why everything gets more expensive. Have you ever heard your parents say, "Things were much cheaper when I was younger"? They're usually right. That's inflation. Imagine your favorite burger costs $5 today. A few years later, the exact same burger costs $6. The burger didn't suddenly become magical. Your money simply doesn't buy as much as it used to. That's inflation. This is why keeping all your money under a mattress isn't enough. As time passes, your money slowly loses its buying power. Money that stands still often moves backwards. Currency. Why money looks different around the world. Now imagine you're traveling from the United States to Japan. Your US dollars aren't the money people use every day there. Every country has its own currency. The United States uses the dollar. Japan uses the yen. The United Kingdom uses the pound. Much of Europe uses the euro. Different currencies allow countries to trade, buy, sell, and grow their economies. And because exchange rates change, the exact same amount of money can be worth more or less, depending on where you are. Money isn't just paper. It's a system built on trust. So today, you learned 5 ideas that quietly shape almost every financial decision you'll ever make. Taxes, banks, interest, inflation, and currency. But here's the truth. Understanding how money moves is only the beginning. Because in part 2, we'll uncover the concepts that separate ordinary earners from long-term wealth builders. Credit scores, investing, recessions, value, and the one resource you can never earn back, time. Trust me, you won't want to miss it.